At some point, everyone who invests imagines the same quiet dream: a nest egg that grows while you sleep, a portfolio that makes money work harder than you ever could. But here's the question almost nobody asks: what hidden forces are quietly working against you? Because the truth is, most investors don't lose because of bad luck. They lose because of blind spots, the uncomfortable truths that no glossy brochure, no trading app, no get-rich-quick seminar dares to say out loud. Like the tiny cracks in a dam that go unnoticed until the water breaks through. Today, we'll trace those cracks. These are 7 unsettling facts about investing that every investor needs to confront, the ones that could save your portfolio, your patience, and maybe even your future. So sit tight, because ignoring these truths is more expensive than any bear market you'll ever see. Fact 1. Your biggest risk lives in the mirror. Your biggest risk as an investor isn't the market, it's you. When people hear you invest, they assume you're great with numbers, that you've got spreadsheets full of formulas and some magic calculator. But the truth? The math behind investing is so simple, a kid with a calculator could do it. The hard part is keeping control of the voice in your head when the market falls 5% in a single day. Or when everyone on social media is screaming about some stock that's going to the moon. Everyone knows you're supposed to buy low and sell high. Yet study after study shows the average investor does the exact opposite. Why? Fear and greed. They hijack your decisions when it matters most. Think about March 2020, when the market crashed at the start of the pandemic. On paper, it was the buying opportunity of a lifetime. But in the moment, it felt like financial suicide. The investors who won weren't the smartest or the fastest. They were simply the ones who could stay calm while everyone else was panicking. So before you obsess over spreadsheets and ratios, ask yourself, can you watch your portfolio drop by 30% and not flinch? Can you resist chasing the latest hot stock that everyone's talking about? Can you stick to your plan when it feels like everything is falling apart? Those mental questions will determine your success far more than any formula ever will. Fact 2. Mistakes are the price of admission. Here's another unsettling fact. You will make mistakes. Not might, will. It doesn't matter how many books you read, how many videos you watch, or how many gurus you follow. Every investor, even the great ones, has a trail of bad trades, missed opportunities, and moments they wish they could erase. They've bought at the very top. They've sold winners too early. They've held losers too long. What separates the successful from the frustrated isn't some magical ability to avoid mistakes, because that ability doesn't exist. The difference is how they respond when the inevitable happens. Most people make one of 2 bad moves. Either they beat themselves up and lose all confidence, or they pretend it wasn't a mistake at all, and they never learn a thing. Both of those reactions are portfolio killers. The reality is simple. Mistakes are the tuition you pay to learn how investing really works. The only question is, how much will you pay? The most expensive lesson is the one you never bother to learn. So when you blow it, and you will, be honest with yourself. Was it your strategy? Were you chasing hype? Did emotions get the better of you? That kind of self-reflection stings, but it's far cheaper than repeating the same mistake again and again. Remember, nobody gets a perfect record, but the people who keep growing are the ones who turn their losses into lessons. Fact 3. Don't let taxes trick you. Taxes. Just hearing the word makes some investors freeze. But here's the unsettling truth. Trying too hard to avoid taxes can cost you more than just paying them. Too many people hold on to a stock that's already up 500% just because they don't want to trigger capital gains, only to watch it crash back to earth. Others pass on a great investment opportunity just because they're worried about the tax bill. That thinking is backwards. Taxes aren't a punishment. They're proof you made money. You only owe them when you win. And here's a simple way to look at it. Would you rather make $100,000 and pay $30,000 in taxes, or make $50,000 and only pay $10,000? Higher taxes usually mean you've done better overall. Of course, you should still use smart tax-friendly accounts like IRAs or 401ks. And being tax-efficient matters. But never let the tail wag the dog. Focus on your after-tax return, not just lowering your tax bill at any cost. The best investors don't avoid taxes. They plan for them, pay them, and move on. Don't let the fear of taxes trick you into leaving money on the table. Fact 4. Chasing what's hot burns you out. This one hurts to hear. Jumping from one hot strategy to the next is a recipe for bad returns. The market is full of investors who can't sit still. They chase growth stocks when tech is booming, then switch to dividends when things slow down, then leap into crypto when it's all over the headlines. Each time they switch, they tell themselves, this is the one that'll work. But here's what really happens. They buy high, sell low, and repeat, over and over again. Look at Warren Buffett. He didn't become the most famous investor by hopping on every trend. He stayed consistent. Even during the dot-com bubble, when everyone said he was missing out, he stuck to his principles. And when the bubble burst, it was clear why. That's the pattern you'll see with most great investors. They're not chasing the hottest strategy. They pick an approach that works, and they stick with it, through the good years and the bad. Sure, it's okay to refine your strategy as you learn, but completely abandoning your plan every time the market shifts, that's not growth. That's just chasing performance, and it almost always ends badly. Stay consistent. It's not flashy, but it works. Fact 5. Simplicity beats cleverness. Here's something the industry doesn't want you to believe. You don't need a complex strategy to win. In fact, complexity usually loses. The financial world thrives on making investing sound complicated because complexity is easy to sell and it justifies charging you more. But time and time again, studies show that simple strategies outperform complicated ones over the long run. You've probably met someone who's glued to their screen all day, juggling 17 technical indicators and complicated option spreads, and yet they still end up lagging behind a basic, boring index fund. It's kind of funny when you think about it. The people who quietly build real wealth usually have the simplest plans. Diversify, keep fees low, invest consistently, leave it alone long enough to grow. That's it. Sure, we all want to believe there's some secret formula or algorithm to beat the market. But markets are messy, unpredictable, and smarter than any one person. So don't get caught in the trap of thinking more complicated equals more successful. Simple doesn't just work, it wins. Fact 6. Not all risks pay you back. Here's an unsettling truth most people ignore. Not all risks are worth taking. Some just destroy your money. Yes, you have to take risks to grow your wealth. That's part of the game. But here's the catch. You need to know the difference between a smart risk and a reckless gamble. Yet every day you see it. Someone avoids the stock market because it feels too risky, then dumps their savings into some obscure crypto project because a YouTuber promised it would 10x. That's like refusing to swim in a pool because you might drown, then diving straight into the ocean during a hurricane. Smart risks have decent odds, fit your long-term plan, and don't bet more than you can afford to lose. Reckless gambles, they're just blind hope wrapped in hype. Investing isn't about avoiding risk, but it is about picking the right ones and knowing when the reward is worth it. Take the risks that belong in your plan and leave the lottery tickets for someone else. Fact 7. Stop measuring yourself against everyone else. One of the biggest traps investors fall into? Comparing their returns to everyone else's. Scroll through social media for 5 minutes and you'll see people bragging about 1,000% gains, perfectly timed trades, and easy money. But here's what they don't post. The losses, the sleepless nights, the blown-up accounts. Even when those gains are real, they're often more about luck and timing than skill. And what happens when you see those highlight reels? You start second-guessing your own plan. You ditch a perfectly good strategy just because someone else claims to be doing better. That's a fast way to get nowhere. There's only one question that actually matters. Are you on track to hit your own financial goals? That's it. Not whether you're beating your brother-in-law. Not whether you're outperforming some influencers' cherry-picked trades. Investing is personal. Learn from others? Absolutely. But playing someone else's game is a sure way to lose. Run your own race. That's the only one you can actually win. So now you know. These aren't the kind of things the gurus like to tell you, because they don't sound flashy. But these 7 unsettling facts are what separate the investors who quietly build real wealth from the ones who keep spinning their wheels, wondering why nothing works. You don't need perfect timing. You don't need a secret formula. You just need to understand what you're really up against and play the right game. If this helped you see investing in a different light, do 2 quick things before you go. hit the like button. It helps more people find this kind of no-nonsense advice. Subscribe to the channel and tap the bell, because the next video might be the one that finally clicks and changes the way you build wealth. And if you've learned your own hard-won lessons about investing, share them in the comments. You never know who needs to hear your story. Thanks for watching, and remember, the market doesn't make or break you.